Hey everyone, Kevin here. In crazy times like this, it seems like there's no other possible outcome other than a massive crash to reset everything and make real estate sell for pennies on the dollar and stocks sell for pennies on the dollar as well, to give us all the opportunity to get in and get invested finally. Because after all, where's all this stimulus coming from? It's just being printed out of thin air and added to the federal budget deficit. That is, the debt keeps getting larger and larger and larger. Not only is the federal debt growing and growing by the year, now over $24 trillion, but household debt in the United States continues to grow and explode as well. How can there not be a massive crash, a massive reset, especially as we continue to debate more and more stimulus? And don't get me wrong, I want my free money too, but I can't help but think that I'm borrowing from my children to line my pockets now, and it makes me wonder, what are the outcomes of this? Because if the outcomes are gonna be a big crash, I may as well not invest now. I may as well wait. So today, I wanna go through the journey of what is this all going to turn into? What does all this extra debt and printed money actually lead to? Let's talk about it and try to figure it out together. And then I want to know what you think. So a lot of economic theory today comes from this dude, John Maynard Keynes. And basically, from his ideas, they created this concept of Keynesian economics. See, they took his last name and added IAN. All right, cool. Let's put that away. Anyway, his theory was essentially that when times are bad, the government should spend like crazy to make us all feel a little bit better, to give us stimulus and just make the pain stop. And that's kind of what Treasury Secretary Steve Mnuchin saying. This is a war, and we need to win this war. We will do whatever it takes, even if that means adding trillions of dollars to the debt. And then John Maynard Keynes says that, well, when times are good, that's the time for the government to step in and regulate and tax. So essentially what we're doing is we're trying to soften the bad and kind of lift everybody up when things are bad and kind of dampen the fun and take the Kool-Aid away, the punch bowl away when times are good. So in other words, we hate them when times are good and we need them when times are bad. Is the role of government, essentially. That's the theory, the basic theory of Keynesian economics. And the premise is that it's during those bad times we'll have debt that'll grow, but it's okay, because in the good times we'll just pay off that debt again. The problem is that hasn't really been happening. In fact, the last time we tried to pay off that debt in 2018, Jerome Powell almost crashed the economy. He pretty much tanked real estate a good 12% instantly and tanked the stock market at the end of 2018 pretty damn hardcore. So that it makes you wonder, how could Jerome Powell live with himself, cranking out the dollars and giving us all the stimulus money, just adding to the debt, if it's just gonna saddle us with more and more obligations in the future? Well, to understand this, I had to go back to the dollar and thinking about money. What does money do for us, and what does it actually mean? So then I thought to myself, okay, well, what happens if I go buy a hot dog? I feed myself, the guy gets $1. What does he do with that dollar? Well, he's gonna give it to his son, and the son's gonna go buy a Lego, and the guy who packaged the Legos together on eBay is gonna take that money and go spend it at Target. So that way, the next time the Target employees stock up toilet paper, the Target employees got $1 to spend on toilet paper before we can get our hands on toilet paper. In other words, the dollar moves around a lot, and I get it. That's called the velocity of money. In fact, when we do something as simple as taking $1 and putting it into our bank account, it moves through the economy about 1.4 times. So in other words, $100 in our bank account moves through the economy about $140 worth of money. It's kind of like creating money. It's weird. But if we take that same dollar and we spend it on the hot dog, it actually moves through the economy about 5.5 times, which means $100 spent on hot dogs kind of creates $550 worth of wealth. And so obviously, the more Jerome Powell cranks out money and prints money, the wealthier we could all be. I mean, it gives us more money. More stimulus means I get to go buy myself some new shoes or some new shades, or maybe I'm just gonna invest it in stocks and let some other dude who just sold the stocks go buy some shoes and some nice shades. Yeah, that would work too. So in other words, when money is printed, demand goes up. But wait a minute, if demand goes up, that means prices are gonna go up, right? I mean, if all of a sudden, instead of one person in line at the hot dog stand, there are 10 people in line at the hot dog stand, the hot dog guy's gonna go, oh, screw charging $1 for the hot dogs, I'm gonna start charging more. And then we start thinking about this is gonna cause inflation. And inflation, we're gonna end up like Zimbabwe or Germany by World War I standards, where they're moving around with wheelbarrows of cash and their money is completely worthless. Yeah, well, that's where the drama stops. In fact, that's exactly what does not actually happen when money is printed. Even though that's what we believe is going to happen, it's not how our modern economic system works. What I just explained to you is economics 101, but the reality is economics are much more complicated. And when we actually peel back the layer, we go, oh, that's what's happening. And guess what happens once we know what's going on in the engine? We know how to actually make money in the system. Because remember what they say, if you can't beat the game, play the game. Actually, I'm pretty sure it's if you can't beat them, join them, but we'll just go with it. Let's go back to the hot dog dude and think about real economics. Let's actually peel back the layer here. What happens when the dude now has 10 people in line at his hot dog stand? Does the guy immediately raise his prices? No, actually, what do we do in America? We start thinking to ourselves, you know what? I need a faster hot dog cooker. I need to be able to produce more hot dogs so I could sell more hot dogs. The price doesn't necessarily go up. What happens is Americans become more innovative and we start thinking of, well, how am I going to become more efficient so I can fulfill this increased demand? In fact, think about it this way. When cars were produced in the year 1905 and the Model T was on the factory line, how efficient did the factory have to be? Not very, because very few people could actually afford the car. So additional efficiency didn't matter. But as soon as more people began being able to afford cars, what happened? Well, then efficiency had to increase. Prices didn't necessarily go up, they actually came down. That is, cars became more affordable, and so what happened? More people ended up with cars. That's the opposite of inflation. That's actually deflation. So as there's more demand and more money is printed, we actually end up seeing corporations and business owners look for more ways to satiate that demand and end up creating more efficient technologies and actually bring down prices. This is weird. How else can we think of this though? Because this is odd. This doesn't completely make sense. Well, if you lived in 1900 and you were living paycheck to paycheck, you might be living with Joseph. That is, you might be living in a brothel. If you live paycheck to paycheck in 1950, you might be living in a 3-bedroom, 2-bath with 1 TV and 1 car. In the 1980s, if you were living paycheck to paycheck, your family might have moved into a 4-bedroom, 2-bath house. You might have had 2 TVs, and heck, maybe 2 cars, and maybe even a cell phone. And today in 2020, even a paycheck to paycheck family might have multiple cars, multiple smartphones, multiple computers, multiple TVs, access to Amazon, access to immediate 2-day or 1-day free shipping, and most of the luxuries that people who are not paycheck to paycheck have. Now, I'm not talking about yachts and exotic vacations in the Hamptons, but basics, iPads, phones, laptops, luxuries that actually make us much more efficient and give us the capacity for building our wealth. In other words, ironically, the more money is created in our society, the wealthier we become over time, whether we realize it or not. And this is really interesting because it's going to give us a look into how do we make money in an era of Jerome Powell printing money, yeah! Well, to understand this, we have to peel back the layer of debt. We have to understand how debt works. Usually when you or I think of debt, we think, well, I owe, I must repay. That's what we're taught. I take out money to borrow against a car so I can own a car. I only have to put $5,000 down today and I drive off that lot with a brand new $40,000 car. At some point, I gotta pay that money back. Same thing goes for a house. Same thing goes for when I borrow against my stocks on margin. I gotta pay that money back. If I borrow from Peter, I should be paying Peter back at some point in the future, even if I'm temporarily paying Paul. Well, in 1694, the British government borrowed 1.2 million pounds. And guess when the British government repaid that 1.2 million pounds? Never. Instead, guess what they did? They said to a group of merchants from whom they borrowed the $1.2 million, or pounds, hey, how about you all just print some money and write on it, I owe ya, and we'll call it a banknote, and, we'll get back to you in the future. Well, that established the first central bank that we modernly now think of as the Federal Reserve, aka Jerome Powell, and the most powerful printer in the world, where he can print money, and now he can even do it digitally. He just changes a number in a spreadsheet and boom, $2 trillion for the United States Treasury. Here you go. Steve Mnuchin, you need another $2 trillion. Here you go. Donald Trump, you want to sign some checks? No problem. Oh, wait, nope. Change spreadsheet. Boop. Oh, done. Going to bed. Fine, but I mean, at some point, this debt has to be paid off, right? Well, let's look at a recent example of countries that actually tried to pay off their debt. Let's look at Portugal, Italy, Greece, and Spain. You might know these countries by their derogatory acronym, known as, unfortunately, the pigs. The reason they received this acronym is because their countries tried to pay off debt through strict austerity measures over the last 10 years. In fact, austerity is almost seared into our brains as something that's terrible, that made people poorer instead of wealthier. In other words, as soon as these countries tried to start paying off debt and stop spending, what happened? Their cities started decaying, the people stopped spending money, and the overall welfare of the people became worse, enough to leave them with a disgusting and derogatory label like the pigs: Portugal, Italy, Greece, and Spain. But these problems weren't just isolated to those countries, they echoed throughout all of the European Union. And so now, one of the world's strongest and largest economies, Germany, basically sits at zero growth, along with the rest of the European Union. See, you know how in America we say things like, ho, the 30-year mortgage is now under 3% when you want to go buy a house. Well, this is why you get people like the Germans in Germany going, 3%? We have 1.5% interest rates. I can make fun of Germans because I'm German, okay? Ich spreche Deutsch. Anyway, the point is, there's so little growth in European countries that their interest rates are so low because nobody wants to invest. In other words, the countries have focused so heavily on being that Bavarian housewife that is going to cut the budget and everything will be paid off and we will have no debt, that growth has essentially been eradicated from the economies. That's not a political reference or a slam at housewives, okay? That's a reference to Angela Merkel, okay? She goes by like the mother of Germany, all right? I'm just trying to be PC here, okay? I don't care if you're left, right, or center. I'm just trying to explain what's gonna happen in America so you know how to make money, okay? Okay, but all this said, I mean, America has had to have paid off some of its debt in the past. Well, let's look at World War II, for example. World War II cost right around $250 billion. And at the time, the United States economy produced about $250 billion worth of production. Have you ever heard of the gross domestic product? Yeah, that was $250 billion, and they literally spent all of it. In other words, an entire year of production for the entire United States was gone, spent on World War II. But that was borrowed money, and the economy just kept growing. So when was that $250 billion repaid? Never. It was never repaid. In fact, it's just part of the now over $24 trillion debt that the United States economy has, which our economy produces just about $20 trillion of economic productivity per year, which means we actually owe more than our country produces in a year. But we're not even thinking about paying it off. And again, the last time we tried to pay it off by raising interest rates and starting to sort of reduce the balance sheet, reduce the debt, the economy almost tanked in 2018. That didn't work out, so we went right back to 0% interest rates, or lower interest rate. But this is weird, because we have to pay off our debt at some point. We don't want to end up like Zimbabwe or Venezuela, where all of a sudden a loaf of bread costs $1 one day, then it costs $2 the next day, then it costs $4 the next day, and then it costs $16 the next day, and before you know it, I'm bankrupt. I may as well not even work, because you need wheelbarrows worth of money to pay for things. Well, there's only one difference between Zimbabwe and Venezuela and the United States, and it's kind of one that is kind of eerie to think about because it doesn't make us feel good. But the American economy and the US dollar maintains more trust. And in addition to maintaining more trust, we owe most of our debt to ourselves. In fact, over 70% of the United States debt is owned by us through pension funds and treasury bonds. It's not the Chinese, it's us. We own most of our own debt. So it's kind of like I wrote myself a loan of $1,000 and I'm like, well, Kevin, when are you going to pay your own $1,000 back? And I'm like, I'm not going to worry about it right now. I'll just worry about that later. But that later never comes. And instead what happens is our debt number keeps growing. We keep printing more money on the basis of United States economy and the strength of the dollar and trust. Our debt keeps growing. People keep becoming richer. We keep living more efficient lives and we keep creating more and more technology. But when are we going to pay this money off? Aren't we going to see hyperinflation? Well, the irony is, so far, the answer to that is no. In fact, the more the government prints money, the more demand we see in our economy and the more we just see efficiencies increase. And ironically, inflation readings are going down despite all of this money printing, which basically is a sign that our economy is deflationary by default, which basically means if there were no money printing, prices would just fall by 2 to 3% per year. But because we crank the money printer, prices actually go up by 1 to 2%, which is nominal and actually encourages us to spend and invest. Because if there were deflation, we wouldn't invest in things like stocks or real estate. We would just keep our money in savings, which would be bad. But because of money printing, we actually end up investing in things like the stock market, into businesses, into venture capital, into real estate, into innovation, into increasing our businesses, into hiring people. So at this point, you might think to yourself, well, Kevin, I don't believe a word you're saying. And that's okay. I want you to make up your own mind. If you don't believe a word I'm saying or what I believe in or what I believe is beneath our economic engine, you should buy gold and you should buy Bitcoin. Because those will protect you, ideally, hopefully, is what they say, from hyperinflation and this massive market correction that's coming because of all this money printing and all this debt that's robbing from our future generations. But based on what's actually historically happened, the more money we borrow today, the richer our future generations are. Think back to the paycheck-to-paycheck family from 1950 and 1980 and 2020. The more we borrow, the more efficient our economy becomes and the richer we actually become, even though we're more in debt. And so, even though that seems insane, and it seems weird, and it seems counterintuitive, what does that mean for you? If you are paycheck to paycheck today, you are a cop, a firefighter, a teacher, you're a real estate agent, you're a computer programmer, and you're just like, Kevin, I just need to know. Is the market going to have an epic, massive correction after all this hyperinflation from all this money printing? And do I invest then? Or what does this actually mean? Well, I can't tell you that there's not going to be a correction, but what I can say is our government, at least right now, seems poised to do anything in its power to prevent deflation and to maintain inflation, despite us being in a deflationary market. That is, we become more efficient. The more people line up at the hot dog stand, the more efficient the hot dog vendor becomes. The price doesn't go up. He just becomes more efficient to satisfy demand. When I hold events to teach you all how to learn how to invest in real estate, I have to travel. I have to book a conference room. I have to go to a hotel, and I can only help 100 of you at a time. Well, instead, with technology, what can I do now? I can have a course that's linked in the description below and give you my entire brain when it comes to real estate investing. And thousands of you can learn from me whenever you want, on demand, at the same time. That is efficiency. That is how now I, as an example, can fulfill more demand with the same service. I didn't have to raise my prices. And so if after hearing all of this, you believe, oh my gosh, maybe the debt doesn't matter as much as I thought it would, and maybe there won't be insanely crazy hyperinflation because things will just become more efficient. Cars will start driving themselves. Oh, wait. Yeah. Maybe then we should start thinking to ourselves, okay, well, how do we invest if now we understand how the market actually works in America, as crazy and effed up and weird and counterintuitive as it seems? How do we invest? Well, there's only one choice. You invest in assets. You start by investing in yourself so that you can increase your income. After you increase your knowledge, you increase your skills, you become a professional, whether that's a professional electrician or plumber or real estate agent or CPA, and you learn a skill that can produce more money in this hyper-efficient economy. Then you take that money and you invest it into assets. You buy real estate. You buy stocks. You follow my advice when I go live every morning at 9 a.m. and I say, it's a red day, buy stocks. It's time to buy real estate below market value. Here's how to do it. All of a sudden, it starts making sense. So why do the rich get richer? It's because they finally figured out, that's how the system works. And if you can't beat them, join them. If you like this video, make sure to hit the like button. Thank you so much. Get your 2 free stocks with Webull. Use the link down below. You'll get 2 free stocks with Webull if you deposit $100. Get yourself life insurance so you can enjoy, or at least your family can enjoy, this crazy world and life that we live in. Get yourself life insurance. It's in the link below. Takes you 5 minutes on your phone. And of course, join me in my programs. Link below. Thank you so much, everybody. Have a good day.